What is going on, investors? Hopefully you guys are doing well out there, and what a difference the week makes as we have FAANG stocks bouncing back in a big way. In fact, I think all of these stocks up over 10%, 11%, 12% or more in just the last 5 days. We'll discuss all of the news as tariffs have basically taken over the news cycle. We've missed a lot of other news. We'll obviously be discussing tariffs. We'll be discussing if these gains can hold. We'll also look at these technically as well. Did the technicals hold up? Did we bounce off levels that make a lot of sense? Are there more opportunities? The first things I'm going to say, though, is congratulate yourself if you stepped in when things were dire, when things were down. If you were one of the retail investors that stepped in, congratulate yourself. That's exactly what you need to do. We'll kick things off like we always do with Meta Platforms. We've got so much to talk about. Meta Platforms started the week at 485, blasted higher, like all of these stocks, up 12%. To finish the week at 543, you'll definitely want to stick around and see this one technically. I've got a big announcement, folks. Those of you who've been waiting for Equity Empire, our paid service is now officially launched. There's links down in the description below to an early bird offer. Also, first pinned comment, make sure you get in early. You are going to get access to all of my research here in the future. We've got earnings season starting today. JP Morgan, Wells Fargo reported earnings. I have videos up on the Equity Empire site. Those videos are not going to be going on YouTube. All of these stocks will be covered on an earnings basis also as news requires. Also, if you're one of the first to sign up, I am going to give you access to our small cap service. That means you're going to get blue chip stocks, you're going to get blue chip buy alerts, but more importantly, you're going to get access to our small cap product, which on its own, we are going to sell for thousands of dollars. You are going to get the blue chip and the small cap research at an incredibly low price. In fact, we're basically just giving it away. Not saying that as a joke. Those of you that followed me over to MarketWise and Brownstone Research knows our small cap research over there cost thousands of dollars, and we had multiple 100% winners in a 12-month time frame. You are going to get both the blue chip main stocks and you're going to get the small cap, and it is at a very, very attractive price. Make sure you get over there because we are going to end that very soon because I think it's one of the best deals in all of finance. Thank you all for your support and your patience. And if you have any questions, reach out to me, but I would love to see you over here. This is where the bulk of the research is going in the future. Now, an ex-Meta employee, he told Congress that Meta was helping or trying to help China as it relates to AI, other technologies. This dates back a long time ago. Now, not necessarily the worst kept secret, as both Google and Facebook were trying to construct an underwater internet connection dating back to 2016, trying to connect Los Angeles and Hong Kong. So, and look, this kind of relates a little bit to tariffs, as we have maybe potentially a potential to reset the relationship with China. Now, it can go three different ways. We could come out of this tariff stuff and it's status quo. The tariffs get reduced or some stay in place, and it's basically status quo. The other thing is it gets worse. So the China market gets gated off even more from U.S. companies, and the U.S. market gets gated off and segregated away from China. That's probably not a good thing. Now, probably the best outcome is that the two countries start to cooperate on things. Opens up the market for U.S. companies into China. China market opens up more. It depends on where you stand on these things, whether or not that's a good thing. But those are the outcomes that we're going to be monitoring going forward. Now, moving on to Apple. Start of the week at 177. And maybe the shock of the week as the 125 or whatever, I don't even know what the current tariffs are on China goods coming from China into the U.S., but they are in effect and they impact Apple, most of Apple's products. Yet the shares were up over 11% this week to finish the week at 197, started the week at 177. Also, you want to stick around and watch that technically. Now, obviously, no-brainer of the week, or kind of the no kidding kind of nonsense that you're seeing as it relates to this stuff. Of course, iPhones could cost $2,000 or more if these China tariffs stick. And that's going to be the discussion point as we move into next week. And really until we see resolution here, these are extraordinary tariffs. And the longer they do stick in place, obviously Apple has to make some adjustments, or they have to plead the president to have an exemption for iPhones, or who knows what's going to happen. We'll discuss. Now, there is some panic buying, believe it or not, and this just shows you the strength and the reason why every country in the world wants to sell its products to United States customers. Because, folks, we have recession talks by Jamie Dimon, and all leading economists are predicting potentially a recession. We have interest rates starting to creep up, all these different things pointing to really difficult economic situation. But the United States consumer, what do? Instead of putting the money in a mattress, instead of investing in Apple or investing in stocks or doing smart things with the money, what does most of the consumer does here in the United States? They go out and panic buy things that they believe might be more expensive in the coming months, including panic buying iPhones. So this will create a really interesting phenomenon. And this is supported by JP Morgan's research earlier today. Again, full research on JP Morgan over at Equity Empire, did a full video on the conference call. Now, what's interesting is they're seeing the same thing as well. So as we roll into earnings season, here's the thing to keep in mind. There's going to be many consumer-facing companies that are going to be like, hey, we had a great quarter. They might even say, hey, next quarter actually looks good. I know we've got tariffs, some uncertainty, whatever, but early data looks good. Just keep in mind, some of that could be the front running of these tariffs. Consumer buying iPhones. Well, I have another headline here. Consumers buying PCs as those shipments surged ahead of the tariff announcements as well. So we could have some front loading of inventory, front loading of sales, front loading of consumers buying stuff because of these tariffs. That's just something to keep in mind as earnings. So earnings might not look as bad. Even the guidance or the tone from the executives might not be bad. But again, I think we could all agree, the longer these tariffs stay in place, the more it will impact these companies in a very negative way going forward. Now, how the stocks react will be a whole different story, because there's nobody that would have predicted, and this is why I don't think AI replaces anybody in the stock market anytime soon. 125% tariffs placed on Apple essentially this week, and the stock was up 11%. Now, they're looking to source more iPhones from India, but my understanding is you just cannot get enough coming out of India, at least in the shorter term. Obviously, the company will be working very hard to make that a reality, but I think, again, the longer these tariffs stay in place, the more the iPhone is going to cost. There's no doubt about that. Now, the company is temporarily slashing, though, its TV Plus subscription prices. This as a original series called Your Friends and Neighbors debuts today, actually Friday, April 11th. Not a series I'm familiar with. You're going from $9.99 per month down to $2.99 per month. There were reports, as you recall, maybe a week or two ago, that Apple is losing, I think, about $1 billion per year on their TV Plus. So these, I tell you what, if Apple didn't have its service division and the huge gross margins, huge revenue from those divisions, huge profits, well, the stock would probably not have gone up as much this week. In fact, it'd probably be much lower. But they can balance some things out. Be interesting to see also, Apple obviously has a wide cash flow, or a wide amount of cash, $100 billion of cash. They have access to even more if they wanted to. Do they go out and make an acquisition? And if they do, what space do they go into? Do they go into entertainment? You could be talking about Disney and Apple, or maybe one of these other ones. Apple obviously could be reinvesting into manufacturing and those types of things, whether it's here in the United States, India, or elsewhere. Apple's got some major decisions going forward, no matter what happens with the tariffs. It's definitely going to be interesting to watch. Moving on to Amazon, another stock that you would not expect to have started the week at about $165 and up 12%. Again, as 50 million percent tariffs are on China goods coming into the United States. Amazon, shockingly, finished the week at $185 per share. They pulled the plug on some China orders, leaving many vendors and manufacturing places in China in limbo. I tell you what, I used to sell on Amazon. Some of you remember that. I actually stopped selling on Amazon primarily because the Chinese competition on Amazon got so intense. They were taking over listings. They would bootleg products. There's like literally no way to make money on Amazon unless you're a seller from China or you have this really deep IP or really good brand around your product. In fact, I've seen research where about half of the third-party sellers now on Amazon are direct from China, meaning the manufacturer just imports it into the United States. It gets whipped over to an Amazon warehouse and it gets sold. You can tell when you're on Amazon, you can see the listings, the broken English, those types of things. Also, beware when you're on Amazon, you can sometimes buy a made in the USA product, but again, a Chinese seller has hijacked the listing, bootlegged the product, bootlegged the packaging, and then it comes and arrives at your door made in China. That actually happened to me this week. And so this leaves vendors in a very, very tight spot. It obviously means slower sales on Amazon could be replaced by United States sellers. We'll see. And this headline says that Chinese sellers are mulling price hikes. No, they are going to have price hikes because if you sell on Amazon, Amazon's fees and their fulfillment fees, they are not cheap. And so your margins tend to be rather thin on Amazon. You can't absorb 125% tariff unless you're like a Louis Vuitton or a Rolex or something like that. You just can't do it. And so we are going to see this across the board. The CEO saying that Amazon sellers will pass the tariff costs on to customers. And so you're going to see a rising of price on Amazon. Not necessarily the worst thing in the short term. We've also had a closing of retail around the United States. Joann's, Big Lots, Party City. They've closed primarily because Chinese sellers have taken over Amazon, and all of those goods that those retailers have sold can be had on Amazon for a fraction of the price because the manufacturer is selling it direct. And so these things, whether or not they get worked out, we'll see. Chinese electronics firm Anker, which makes popular batteries and other types of products that are sold on Amazon, have already raised prices, and you're going to see this across the board. This is the reality that is going to set in next week, the following week, over the next couple of months. If these tariffs stay in place, this is going to create dramatic effects on Amazon's income, other retailers' income. The fact that you will have some domestic suppliers or supply coming in from Mexico, Canada, or some of these tariff adjacent or reduced tariff nations, they're going to be able to take advantage of it. I think it's probably a little too soon, a little too early from an investor to position yourself right now, particularly as it relates to a retail investor. If you're a hedge fund, these types of things, you probably are already making these maneuvers, but just keep in mind, this is the type of research we'll have over at Equity Empire. I already have a list of companies that will benefit if these Chinese tariffs stay in place, but you don't want to make that move now because as we've seen, these things can reverse on a dime, reverse in an afternoon. They could get ratcheted up. We'll see what happens. It's choppy water right now. Right now, I would just steer clear, but we're obviously waiting for further developments. Now, Amazon's latest AI voice model, this is available via API, which means you, the developer, can access this through Amazon's Bedrock or Amazon's AWS. This is interesting in the fact that they've released a conversational AI voice model. Be interesting to see if Apple adopts this. That's a joke. I don't think they will, but it's really interesting that Amazon can release something like this. And obviously, as it relates to Siri, Apple has put that off into next year. Now, we have got other autonomous driving news as we get later into the show to Google, but Amazon Zoox, which is another one of these kind of autonomous vehicle companies. They're expanding their fleet and testing in the Los Angeles areas. This is going to become a massive story, massive investment story, massive opportunity here in the United States. I think 5 years from now, there are going to be families with no cars. Obviously, there are families with no cars now. Usually it has to do with finances. But I think going forward, you're going to have affluent families or families that can afford to have 2-3 cars. They're going to be able to cut back on the number of cars that they own because these full self-driving or these autonomous vehicles are going to be much more widely available. So instead of having 2 cars that sit in the driveway for most of the time, maybe you only have 1 car. And then when you need access to another car, you call one of these autonomous vehicles. Amazon, Google, Uber, Tesla, obviously many other companies are going to get involved here. And so this is going to become a big business very, very soon. Amazon-backed Anthropic AI models, they're going to be launching their own $200 a month Claude subscription plan, as that seems to be kind of the premium price point that OpenAI and others have landed on. So if you can afford $200 per month, you get access to that. Andy Jassy said that the company itself didn't say that it was bidding on TikTok, so that was just a rumor, but I can almost guarantee, and I would bet anybody watching this any amount of money, that Amazon did place a bid on TikTok, would love to buy TikTok to US, but that situation is so complicated. Obviously, we saw last week it got another 75-day extension. My guess is TikTok US is going to be wrapped up into these tariff negotiations, and so it's just going to make it a complete kind of muddied mess. If Amazon can get in there and get access to that, I think it'll be one of the greatest purchases of all time, rivaling things like Google buying YouTube, Meta buying Instagram, among others. Now, moving on to Netflix, start of the week at 8:31. I really like this stock as it's insulated quite a bit from these tariff news, up 10% this week to finish at 918. Not a lot of news out of Netflix, but you have the Minecraft movie, which I actually attended. I haven't gone to a movie theater in over a decade. I'm not a movie guy. I said that on last week's show, but my kids wanted to see the Minecraft movie. I had low expectations. In fact, I had my phone there ready to watch the Augusta National Women's Amateur Open, and I was going to watch that because I actually knew a young lady that was just a couple of shots off the lead. I've caddied for her before. I was going to watch to see if she could take down the crown. Unfortunately for her, she wasn't able to do that, but the movie was actually pretty darn good, so I'm not actually surprised at all that Minecraft movie blew up with a $157 million opening weekend. It actually wasn't a bad movie. Now, moving on to Nvidia. Guys, hold on. I got to clean my glasses off a little bit. And this is right. Nvidia started the week at $88. And if you bought the dip on Nvidia, you are the man or you're the woman, and you should go and celebrate this weekend because you were up 25% in 5 days. Nvidia shares crossing nearly $111 per share. Again, you're going to want to see this technically. It bounced like a basketball off of support. Now, AMD, among other stocks, leading the chip sector higher this week as those China tariff reports came into more focus. Now, there was a great report by SemiAnalysis. I don't know if this is behind a paywall or not. I do pay for this, and so I don't want to necessarily give away too much about what they talk about here. It's a big, long article. Basically, here's the nuts and bolts of it, and the tariff announcement from China basically supports this. If you make your chips in Taiwan, which Nvidia does, AMD does, and Broadcom and many others, basically everybody except for Intel, pretty much exclusively makes their high-end computer chips in Taiwan. If they are made in Taiwan, they are not subject to the tariff. Also, if they get shipped to Mexico, which is now turning into a big data center hub, not where the data centers are located, but they're manufacturing the data centers in Mexico. You could also send it to one of these other tariff-friendly nations as well, as those will emerge probably over the next 90 days. Those will not be subject to this as well. If we want to go back to like Amazon and stuff like that, a lot of the goods that are manufactured in China, they'll just get exported to another nation and then make it their way into the United States, because 125% tariff is just absolutely ridiculous. Apple could probably maybe pull that off as well. That's why I think you saw a muted reaction from those stocks this week, whereas in reality, 125% tariff is basically devastating for those business for any length of time. But as it relates to semiconductors, they're basically immune if you make your chips in Taiwan and they're shipped even directly into the United States, but most of them actually make a pit stop somewhere else and then come into the United States. Now, Nintendo Switch, that has a custom Nvidia chip inside of it. They're delaying their launch in China after launching, or it's set to launch in Japan and Europe on June 5th. Now, Nvidia closed a deal this week to acquire a startup called Lepton AI. You go to Lepton AI's website. It looks like, I think this was kind of like it's called like an acqui-hire, I think, or you're hiring the employees there. Because if you look at pricing, it's like $30 a month, maybe plus a usage fee. Maybe they're buying this for the actual product. My guess is maybe it's for the employees here, but it wouldn't surprise me if over the next 6 to 12 months, Nvidia makes more headroads into developing their own cloud and taking their high-end GPUs, and instead of allocating them off to the hyperscalers, they dump it in their own data center and they charge you access for that. I think that would transform Nvidia's business in a certain way, and probably in a good way. Now, moving on to Google, is this right? No, that's a year chart. I was like, why isn't Google up? It started the week at 141, blasted off like all of these stocks up for 11%. Finished the week at 157. Google unveiled its 7th generation TPU. It has a 2 times relative performance per watt, which means it's much more efficient. It's also liquid cooled. You can combine over 9,000 of these babies all together. This is also powered by Broadcom. Probably good news that Google rolling that out. They also unveiled a new Gemini AI model. More news as it relates to this is they're using Gemini. It could be, folks, that Gemini, because we're worried about Google search, right? We're worried about Google search, and I certainly have thoughts over that over on Equity Empire that I've shared over there already, and kind of the way to play, maybe a decline in Google search, or a way to play the fact that Google search, maybe you don't see the volumes flowing through Google search. And there's a clear beneficiary if search volumes taper out, or if advertisers are not able to advertise against Google search. What Google could do, though, is it could become the backbone of AI, because you have a choice as an organization, like a Samsung, or we'll talk about here in a second, another headline as it relates to Reddit. You could develop your own AI. And you could develop that and constantly have to update it and retrain it and these types of things. You could go get an open source model from Llama or DeepSeek. Again, you're kind of in limbo when you do that. You also have a lot of competition, but you have to host that large language model. You have to maintain it and update it and all these types of things. Well, Google could offer Gemini to Samsung in terms of its robots. It could offer it to Reddit. We're already seeing many uses of this. And so that could become obviously a very, very big business. Does it replace the search engine click business? Probably not. But could it be a big business? Very big business for Google? I think so. Now, they reiterated, we'll get to Microsoft. They said something different this week, or maybe there's some rumors of something different, but Google said, no. We are going to spend the $75 billion plans for data centers this year, even with the tariff woes. And as I outlined, the tariff woes really don't apply. That's how you know semiconductors, man, they're in demand. It's like pharmaceuticals. They wouldn't slap 125% tariff on, some pharmaceuticals. They're not doing that. Those are exempt. Also, chips are exempt. So you see where the status of semiconductors in. It's basically in life-saving medicine categories, and Google reiterating their spend there, and it'll probably go a long ways. Now, Waymo on track to start mapping streets in Tokyo. Got to imagine that's a pretty big market. They're also starting off strong in Austin, Texas. They have partnered with Uber to offer their rides. Look, I talk to females and women out there. They way prefer this option, getting in a Waymo with no driver. That is so attractive to them. So I think you've got a much larger market. Like, most of the people watching this are men. And so maybe you don't really realize this or don't sympathize with it, but most men are pretty comfortable getting an Uber. But most women that I talk to, they're very excited about these autonomous vehicles. So I think this is going to be a much bigger market than people realize. And then obviously that I talked about earlier as it relates to Amazon, I think as this technology becomes more and more available, more and more families, instead of having 2, 3, 4 cars, you might slim down to 1 car because you have access to these autonomous vehicles. Now, what we are seeing, though, is these are grabbing market share inside of San Francisco. Uber's market share declined to 55%. And again, this is what just Lyft, Waymo, and Uber operating in San Francisco. Wait until you got Zoox. Wait until you have Tesla. So that's what has me very concerned about this market from an investment standpoint. Market share is going to get sliced up. I don't think you have a rapid expansion of market share. I think it's going to get sliced up. And I think the middlemen are going to get squeezed, because if Uber is taking a cut from these Waymo rides, well, Tesla or Amazon or one of these other companies can come in there and capture that margin. Moving on to Microsoft started the week at 347. This one, is like a basketball that was all pumped up. It popped off a support area and was up 12%. Finished the week at 388. We'll see if it holds it next week. Now, the company apparently has some flexibility as it relates to CapEx spending, as we saw numerous stories pass over the past couple of weeks and even this week that they're either slowing or pausing some of its artificial intelligence related CapEx spending. I think some of this has to do with OpenAI is partnering now with SoftBank, with Oracle. So they have found other areas of capacity. And I think for Microsoft, probably good to diversify a little bit of that. Now, OpenAI is considering an acquisition of an AI device startup. This startup is no just any kind of startup. It's actually backed by Johnny Ive, who's obviously a famed Apple designer, Apple iPhone, among other products as well. Companies rumored to be working on some kind of device that functions like a phone but doesn't have a screen and really just uses your voice. Obviously, more of these devices will come available over the next year or so as you have glasses and eyewear from Meta and Google and others, and obviously other companies will jump into the fray. Now, OpenAI is said to cut down on its testing time for its new models. This is one thing that I've been seeing inside of the AI communities is that they believe that some of the longer training times might not be as required as much. You're still going to have long training times, but because of the advancements and all the type of stuff and a lot of the just existing models, you can cut down your training times, and that's probably a good thing. Now, moving over to Tesla, start of the week at 219. This one up 15%. Finished the week at 252. Company has stopped taking orders for Model S and Model X orders. Those are the more expensive cars that Tesla makes in China. That is because those models are actually made here in the United States and actually exported into China. So obviously a hefty tariff applies there, but these are very expensive cars, and my guess is very few of them in relative terms compared to their other models probably even make it into the country. Now, company unveiled a new cheaper Cybertruck. If this is cheap, you can afford a 70,000 Cybertruck. You are the man. But they unveiled this. Apparently, you get a $7,500 tax credit, which is still in place. I guess Trump hasn't got away with that. You can get this bad boy for $62,000. So now they have the good, better, best business model. I won't get into that, but technically you have this on a product cycle. You try to get people to land on this middle one. The cash price on the new long-range model, which I think lacks a hardcover on the kind of truck part, among other features, that's about 62 grand, 72 grand for the all-wheel drive one. And then there's a Cyber Beast version, which is 100 grand. You can lease these bad boys for $700, $900, or $1,000. You'd need about $7,500 down. That is no cheap pickup, that's for darn sure. Now, Grok 3 model is now available via API. That's allowing other startups, other companies to access this. Basically, the price is $3 per million tokens. That's about 750,000 words. This is why you see companies like Salesforce and also ServiceNow, when they talk on their conference call that they're going to a consumption-based model, what they're doing is they're offering AI services, and they're using APIs, not necessarily of Grok, but one of these other models. And basically what they're doing is for every word that comes out, they're also charging you that, or they'll batch it into like 1 million words or something. So the more you use it, the more they charge. Salesforce, ServiceNow, they have to pay a little bit for the GPUs and maybe the API calls, and then they pocket maybe the difference there. That's going to be a big business model going forward. Now, Elon Musk got in a battle with a trade representative that also works for the Trump administration. There were some people that speculate that, there's rifts here and this type of thing. Trump loves this. Trump loves that people go back and forth. He absolutely loves this. And anybody that's worked in a corporate environment know that you have one employee over here talking crap, the other employee talking over here over crap. It's never a pretty thing. And we're just seeing it play out on the biggest stage, which is United States politics. Moving over to the technical segment of the show, and the technicals, they held up, guys. They held up. We talked about how we had skipping price action on the S&P 500, which means you created gaps in these charts on the S&P 500, which is very, very extraordinary, very rare to see. So you had a violent move to the downside, found support at a pretty logical area, although we wicked very hard through the area of support that we had marked out here on our channel. But now we were comfortably kind of back in the channel. I'm going to keep these channel lines on until you have kind of maybe a weekly close below here, Right now, you're still in the uptrend in the S&P 500. And I don't want to say there's nothing to really be concerned about, but it could be a heck of a lot worse. Meta, look at this. It is closed right on the bottom of the channel. And what do I always say when I do the technical segment? When we're at the top, we're like, we're waiting for a pullback. But what do I tell you? What do I tell you when we're at the top and I say, hey, we're waiting for a pullback, we're going to buy it on a pullback? What do I tell you? I tell you, you got to commit to it, because when you have the pullback, it's never easy to buy. There's always an excuse not to buy. There's a recession. There's a CEO scandal. There's the CEO doing something stupid or whatever. Or there's a tariff, or there's a president, or there's politics, or all those types of things. That's why you have to tune all of that out, and you have to step in at these areas and buy. Now, if Meta doesn't hold this level, you do have other areas that will be monitoring going lower, but as it stands now, Meta holding its technical pattern. Now, Apple, very similar as well, wick through the channel that we've been in for 4 years, almost 5 years now. We've been in this beautiful upper channel. We wick through it. Now, we've done that before. Did that back in January of 2023. But here we are. We've still closed into the channel, so I'm going to leave these on. And again, with Apple, when you come down to the bottom, it's never easy to buy. It's never easy to buy a company that relies on China that has now 125% tariff on its good. Never easy to buy, but you kind of have to do it. Now, Amazon, slightly different area. This is why I have a green box on Amazon, because we don't have like this clear uptrend. We more have sideways consolidation. In this consolidation pattern is an area to buy. We are at the top of the range, although you got a much better opportunity at like the 160s earlier in the week. As you get deeper into this box, I think the more aggressive you are. Netflix was a buy several weeks ago. It continues to move higher. It continues to be locked in this like 3.5 year uptrend. There is actually very little deviation. Netflix continuing to power higher. They also are the first to report. My goodness. They report in just 6 days, folks. We'll be reporting Netflix earnings. I'll still report FAANG. Those of you that are curious, I'll be posting FAANG earnings still on YouTube for free. But everything else, unless there's like a major move or a major news story, everything else is going behind a paywall, because it's not economically feasible to post JP Morgan earnings videos on YouTube. You're going to go broke basically doing it. Now, moving over to Nvidia, found support down here at the $85, $90 level. Now, here's the thing, to always take a step back with all the panic, and I've been getting death threats and people have been getting mad at me on social media and all these sites. Here's the deal, is Nvidia stock is at the same price it was a year ago. So really not much has changed with Nvidia in over a year. So yeah, it has gone down to 88. Yeah, it's gone down or gone up to 150, but here we are at 110. You're looking for a move back to 150 and a break higher. This stock, unlike the rest of these stocks, doesn't report for 47 days, but you'll hear from AMD, you'll hear from ASML, you'll hear from TSM. Those companies will lead the way as it relates to Nvidia. Now, moving over to Google. Still in a very long-term uptrend. The long-term uptrend is this purple line. You're actually still well above it technically. So despite this big drop, it's really only the people with like $1,000 in their Robinhood account that are really, really feeling this. Most 1% investors, this is pretty benign. And we've been through this many, many, many times. Even if you just started investing back in 2020, you've been through drops like this before. And here we are with Google. Probably creates a great buying opportunity. Microsoft's. Depends on where you want to draw the long-term trend, but you did have support down here at the previous highs. We notified you of this on last week's show that the 350 area should create a bounce. It certainly did, and now we're certainly in a buying zone with Microsoft. Finally, Tesla, also very similar to Nvidia. There's a lot of people that are just crying and whining and this and that, and gosh, I hear it every single day. And in some ways, I'm actually privileged to hear it because people actually do want to hear my opinion on these things. But some of you guys really need Fidelity or Schwab to manage your money because you're just not emotionally stable enough to manage your own money. And here's the point to that, is Tesla stock is at the same price it was back in December of 2020. So we're talking 5 years ago. It's the same price it was back in June of 2022. It's the same price it was back in August of 2023. It's the same price it was back in October of last year. Tesla stock has basically gone nowhere. Yes, it's gone down to about 107. Yes, it's gone up to about 480 or so. But until you meaningfully break out to one side or the other, it is basically stuck in that trading range. And I think a professional trader could trade the pops and drop as it relates to Tesla. Folks, that was the FAANG Stock Recap Show for Friday, April 11th. I believe the next 18 months is going to be your opportunity to become financially free. And this is going to be the best opportunity you've probably had in the past decade. And I don't just say this for marketing spin or for fun. I say this from experience. In 2008, I remember the stock market crashing. And at the time I had a business and I had to close the business. I was struggling financially, but I put every last dollar into this drop in the stock market. And people were telling me I was absolutely insane. As this market dropped, I just kept piling money in. I slept on a couch. My brother, if he's watching this video, will remember I slept on a couch, and these were hand-me-down couches. I slept on a couch and he slept in a recliner, and we slept in an apartment that is smaller than just the kitchen room that I'm sitting in right now in this house. Couple of years later, things obviously went really well with a lot of those stock prices. I bought a lot of small cap stocks and those absolutely skyrocketed. And a couple of years later, I bought the house, not that I'm sitting in today, but I bought that house, and it's really, really allowed me a lot of financial freedom because I bought a house a lot less and a lot cheaper than what the realtor and the lender wanted me to buy. Then over the course of the next several years, I continued to invest in stocks. And then you had this big drop in 2020. I could have panicked sold, but no, I doubled down in that era. And then stocks really rallied, as many of you guys experience. And then what did I do? I sold all my stocks again, and I bought the house that I'm sitting in right now. And this is not a house that I even live in. In fact, we haven't even been here in 6 months. It's a beautiful cabin in Northern California. It's very peaceful. And I'm here with my sons to watch the Masters and hang out, and they get to ditch school for a couple of days, and we get to have some father-son bonding time. These are the type of decisions that you can make over the next 18 months. You can either sit there and be mad at President Trump. You can sit there and be cheerleading or critiquing every move that he makes, or you can make money. You decide. In a year or two with the right decisions, you could own a home. You could buy a home outright. If you make really good decisions, you could own 2 home outrights. And I'm telling you, as a father, as a parent, as somebody that has struggled financially and then at other times not, it is so satisfying and so financially securing to know you have a place to go. We've seen fires, we've seen floods, we've seen hurricanes. If you have more than one place, it is very, very securing. I want this for you. I want this for you guys watching. And I think the best way to do that is to join Equity Empire, because right now you're not only going to get my blue chip stock service, where I'm going to basically do everything that I've been doing here on the Investor Channel times 10, give you way more actionable advice and cover way more companies. But you're also going to get access to our small cap service, which again, if you were a subscriber to when I was over at MarketWise, I think we had 10 recommendations in 12 months. And off the top of my head, I think 7 of them went up over 100%. A few of them went up over 200%. In fact, the CEO of one of the companies contacted us because his stock price went up so much, and he attributed it to the research that we put out. The small cap stocks are the value, and the price we're giving this away is way too cheap considering the life-changing things that can happen to you if you invest in the stock market. Folks, hopefully you guys enjoyed today's video. That is it for Friday. I'm going to sit on this couch back here and watch the Masters the rest of the weekend. I hope you all have a safe and fun weekend. We'll be back again next Friday. Who knows if these things will be up and down, but we'll be here to cover it for you. Good luck with your investments.